Hello there, my friends. Chris Marcus here with you on Friday, January 12th, 2018. Hope your year is off to a good start, and welcome on into today's weekly market wrap-up. As you can see here in the financial markets on our Arcadia Economics homepage, a little forecast for some of the things that we have coming in 2018. Because sure enough, they're already developing quickly. A story that came out on Wednesday, of course, since then, now there's speculation. Did the Chinese say it? Didn't they say it yet? Just to the degree that the story is out there. And, well, they should be saying it in either case. As you see the headline, China weighs slowing or halting purchases of US Treasury. So not really a shock. I mean, China's given you every indication over the past decade. They're buying any piece of gold or silver they can find. At the same time, they're financing the U.S. and its money printing operation. They're being accused, I suppose not officially yet, of being currency manipulators, but you can see the tension between the two governments, things not going well, and certainly anyone who's been watching the behavior and credit profile of the United States, I mean, why would you buy treasuries? I mean, again, take away the name. In fact, it's funny. I remember when I first started digging into this, when I was still back working on Wall Street, kind of knew I might be onto something when, it's one of those situations that the numbers are easy enough to comprehend, yet everyone's so conditioned to just accepting that, that's going to take care of it, or we're the U.S. And in fact, I remember going to my old boss and mentioning, I'm like, wow, this doesn't look too good. And him, the other guys that worked around, all of them just said, yeah, well, things like this don't happen in the U.S., which was sign number one that, oh my God, maybe everybody actually is missing this on Wall Street. Which sure enough, years later turned out to be the case. And who's not missing it apparently is the Chinese, because they can see that you have debt that's now gotten to 20 trillion. Latest estimate I've seen when you factor in Social Security and Medicare brings the true debt to over 200 trillion. So the numbers are pretty silly. And let's see, there were a couple great quotes in here. Of course, a top Treasury official, upon hearing the news, signaled confidence in the U.S. government debt market, which at 14.5 trillion is the world's largest. U.S. Treasury market is a deep, robust market within the world, and so we are confident that our economy, with the economic strengthening, that will remain a deep, robust market. Alrighty. I'm glad he's confident. To me, this is kind of like saying, well, if I walk in front of that Mack truck that's steaming down the road at 90 miles an hour, I'm confident I can just use my hand and make him stop. Sometimes being confident is good. Sometimes confidence can be misplaced. I would certainly argue that that's the case here. Also notice he cites the economic strengthening without acknowledging or seemingly being aware that, for the most part, that's been caused by the printed money, cheap credit environment of the last 10 years. And if the market is really as strong as he claims, why is it necessary that rates are still below 2%? Fed's balance sheet is still well beyond anything ever approached historically. We were not talking about small amounts here. So if you scroll a little bit lower here, here was another interesting part. The officials recommended that the nation closely watch factors such as the outlook for supply of U.S. government debt. Well, we know how that's going, just piled on more and more. Keep in mind there was the budget deal, which Congress was trying to reach agreement on a month or two ago. And eventually it just got shelved because it was not funny yet funny simultaneously. I think it was Pelosi and someone else basically decided we're not even going to go to the meeting based on what Donald Trump had tweeted, which, I mean, I think the whole thing is theater, yet just the idea that Congress is blowing off, even sitting down at the discussion with a real estate guy from Queens who has been declared president. And they weren't even arguing over how much to cut. This was just agreeing on how much further to go into debt. So I'm sure China can log on to the internet too and see. I mean, we're not talking about, there's like, well, maybe if we cut a little bit here. I mean, it's so far past the point of no return. So if they're going to closely watch for the outlook for the supply of U.S. government debt, well, hopefully they'll watch this video, because I can tell you firsthand, there's going to be plenty more of U.S. debt coming, plenty more money printing coming as well. More on that in this video later. And then just to continue here, along with political developments, including trade disputes between the world's two biggest economies. And this is what they're going to be looking at when deciding whether to cut treasuries. At the same time, Trump is deciding whether to label China a currency manipulator, which on one hand is true because all of these central banks are currency manipulators. On the other hand, well, I think there's a good case to be made. You have some bubbles in China. I mean, no one really seems to be in the territory of the Federal Reserve when it comes to currency manipulation. So in the end, we'll see how this develops, although certainly if I were China, I wouldn't be buying treasuries. And I think they're pretty well aware of what's going on. Another interesting story here, I wrote an article for Miles Franklin this week, which you may want to check out, because one of my favorites here in the Arcadia household is Keith Neumayer, First Majestic Silver CEO. Some of his interviews are incredible. And a couple of weeks ago, he was talking about how combination of cryptocurrencies and metals could be what finally overwhelms this manipulation scheme where banks sell a lot of paper contracts if they don't actually have the silver to deliver. I believe the link I had somewhere in here to his interview, although here we have Neumayer saying, I believe that the current system with the LBMA and CME/COMEX type system is at the end of its rope. So again, you can take a look at that article. No one knows the exact day when silver and gold are going to trade a lot higher, yet the signs that when you look at it, I mean, it's like if I push something over here and then it knocks over the thing that was standing over there, maybe you don't know when it will happen, but you see energy in motion with a simple cause and effect. And certainly the signs of what you would be looking for to overwhelm such manipulation are certainly in place. So we'll keep an eye on that. Silver actually trading 30 cents higher today. So again, no break point yet, but at least silver moving in positive territory. And again, why might people want to buy silver? Why might people want to buy cryptos? A simple way of looking at it is that quantitative easing, lower interest rates means more money in credit. Higher interest rates or undoing the balance sheet is some semblance of responsibility, which would mean taking away the artificial money, which, again, the Fed's talking about raising interest rates, normalizing its balance sheets, yet at the same time, an incredible essay on the Federal Reserve St. Louis branch website by Brian Reinbold and Yi Wen advocating negative interest rates, which, now if that sounds kind of silly, you're not alone. I mean, the whole thing is a massive scam. The idea that you're going to take $100, give it to a bank that's primarily insolvent, and in your best case, you get back $97 or $98 a year from now in money that's been inflated and is worth less. Yet, of course, that's exactly what they're advocating. And here they even write, conventional monetary theory always assumed that the policy rate cannot go below zero because an individual would not pay, in theory, to lend out his or her money. Well, it makes no sense. So then you scroll down a little farther and you're thinking, all right, well, this Seems kind of odd. Why would someone do that? And here you get, not in my words, but in theirs, here's the real answer. The central bank can also require, by law, large corporations to keep their cash, savings, and loans in the banking system when a negative interest rate policy is implemented. Wow, why don't you just hold the gun to their head? I mean, here they're admitting that it's a terrible deal, we're ripping you off, but we can do it because we created a law that says it's legal. It's actually kind of fascinating. I mean, at least they used to try and hide these things. Now they're just hoping no one will notice or catch on. Truly incredible. And then if we go down a little further here towards the end, love the conclusion. Negative interest rates may seem ludicrous, since why would an individual buy a government bond with a negative yield? But this is what a central bank would like you to think. The central bank's goal is to incentivize agents to shift investments away from government bonds to something more productive economically, thus stimulating the economy. I mean, did they just openly admit to market manipulation? They're incentivizing what people should or shouldn't be buying. And I would say the last decade would show that it really hasn't stimulated the economy. If it had, why are we talking about going to negative interest rates? When is this plan finally going to work? Again, that's why you see people going into cryptos, why people are talking about gold and silver, because all this is based on printed money and artificial conditions that when they go away, you have a problem. So that's why you see the market for the cryptos continuing to grow. Not much happening price-wise this week, except a lot of volatility. But certainly when you add all these things together, people seeing that they're actually talking about negative interest rates. You have China launching a PetroYuan, sending articles. We'll see how accurate they are, but I can't imagine this just came from nowhere. So from my perspective, if you have money in gold and silver or in cryptos and are just patient and leave that as money continues to exit this dollar Ponzi scheme, prices are going to go up of these alternative assets. Because again, what's our market cap today? 710 billion. So still growing, yet when you compare that to the size of the stock markets, the bond market bubble, real estate bubble, and let alone the derivative bubbles that are out there, which get into the quadrillions, I still think it's quite early in the crypto market. But leave your comments below. Let me know what you're seeing, any questions you have, and of course, hit the subscribe button. With that said, I hope you have a wonderful weekend, and we will see you again next week. Thanks.
The land of Arcadia.